All right, let's jump into things. Where we at? Just 2 minutes to 8 on 15th of February. So 2 weeks into the month, halfway through the actual calendar month, and still proving proving to be a pretty sort of wild time to be sort of trading with sort of stuff. But look, this will just basically obviously give us a chance to sort of see how the week finished up, see if there's anything we can sort of drag out for this sort of week coming up ahead. And sort of see if we can sort of make sense of what the hell's happening because at the moment it is really, look, it's a tough time to be trading. I mean, look, it's always going to be a little bit sort of tough with it all, but there's a few people that I've spoken to, and you know what I mean. It's you've got everything lining up in one direction. It looks like okay, yep, here we go, bang, and then all of a sudden, 12 hours 12 hours later, you're wrong with it all. And anyway, look, it is what it is. So let's get on with it. Look, so I'll start off with gold because obviously I've got the chart up here and just sort of unpacking a little bit of what we sort of had through this week because for the most part it was dead. Like as you can see, like this is where we start the week here, Monday 10 o'clock. So here we go. Here was the start of the week. Up, down, boom, boom. It just teased up above that sort of 5100, which of course I sort of covered these things at the time. But you know what I mean. Again, this is a bit of a recap with it as well. We could see with that sort of beauty of hindsight, bit of a negative divergence as it did sort of come out the top side of that 5100. And as I said, I covered this at the time, and this is so much of the market was looking for this level. Actually, take one step back. So much of the market was looking for this rising support. And so my feeling was that sort of like, yeah, we'll probably see a move kind of like this. But of course, what the markets decided to do is because everybody's looking here, plus up to this level of 5100. 5100 is okay, yes, that's the ticket to go higher. So what do people do? Okay, if I'm looking for this level down here, I have my stops here. Move it up there, take them out. People thinking, okay, once it's past 5100, bang, we're up to 5300, whatever, 5200, these kind of levels. Okay, so I'll put my entries over here. So it moves it up, clears out those, so it clears out the stops, drags in the longs, and then drops it down. And then went back very quiet again. And then, of course, we had that big dump down, yada, yada. But what's kind of sort of seemed to have happened through this sort of period is obviously like, if you were short through this little period here, where it was really kind of dead, 40, $50 or something, we are in for a couple of days. You've gone up here, you've got long on the idea that we're going up higher. Well, you've either stopped out straight away, not, or even if you were long through anywhere through this period with the idea that we're going higher, okay, you didn't get it on the first line, pulled back a little bit. Well, it just stopped out and just chopped out everybody sort of through here. I mean, anybody, like, as I said, this was the open for the week. So basically put in a fresh low for the week. And then obviously it's drifted back up here, the other top side here. So, and this kind of like really emphasizes the point at the moment that it is very difficult to be trading through this period, particularly people that sort of like not so much like I'm a very short-term trader. I'm in and out like a bandit, mate. So you know what I mean. I'm happy to get in and out. I'm not really completely wedded to either direction. Obviously, I've got an idea, and this is the whole point of the analysis to sort of pick that kind of direction. But you know what I mean? If things are moving up, then okay, we'll get long. That's fine. And that's what we're trying to sort of ascertain here. And we're trying to have these confirmation levels and sort of see, okay, should we shorting into this rally or should we be sort of looking to sort of ride it and carry it back up? And well, I guess that's the whole point of sort of what we're looking at here now. But excuse me, the fact of sort of going up past this level here that people are looking at, back below this level that people were looking here, because of course, people, I'll stay long. I bought the long here, stops down underneath these previous lows. Well, bang, even they got taken out if they didn't get taken out, 2 minutes later or half an hour later, whatever, through these next kind of candles. And so really these kind of periods that have sort of hit these kind of zones and then sort of bounce back up. And as you can see, it pretty much for the whole week, very much just kind of back in that vicinity of where it started. So it took out the longs, sorry, took out the shorts, took out the longs, and then back into the middle. So really emphasizes that whole idea of sort of indecision. I mean, if you put it on a weekly candle, does look a little bit bullish, but oh, you can't see with all this stuff on here. Really, more or less, that's a doji, and a doji is indecision. So look, from a sort of standpoint, this is higher than I sort of generally look at on the time frame, but very much super highs, super lows, we're coming back, and they're very tight sort of thing. So look, with the RSI and the fact that it's moving up like this, it does lead to the idea that yes, we could probably go a little bit higher here. get back to this, and lower time frames with it all. And the idea that obviously sort of, you've cleared, basically what they do, the term I use is clearing the book. So, you've wiped out all the shorts, you wiped out all the longs, and then here we are back up into the middle. It clears the way to then sort of power on and move up through here. And of course, this was the idea that we would see this sort of touchdown onto this sort of rising support. It obviously closed through it and then sort of dribbled back up. And then we had that sort of moment around this point here where we had CPI, and CPI came out weak, which is dollar weakness. And this is a bit of a dribble on, but it does all lead together. This is a bit of a sort of a dollar weakness, i.e., okay, let's buy gold positive bit of data. And it started to grind up. It closed okay, started a little bit of a bullish direction, as you can see, coming up into the end of the week. So weekend markets, take it for what they are, grain of salt, well, with a grain of salt, whatever, looking for about a 30 buck sort of gap up. So we're back up into this area over here as it is with the weekend markets. I mean, we saw 30 or 40 bucks, I think, on the weekend markets last week, and I think it opened up 10 bucks. But it did then run to that 30, 40 buck level above it. So, around the 60s here up to around that 5,000 or whatever. So anyway, point is where we're at right now. Get this out of the way. It is a conflicting thing, and it's very hard, excuse me, to sort of say, okay, it's going to be going one way or the other. Look, school of thoughts. You've got this rising support. It closed underneath here, and we've continued to respect the underside of it. That's something that I think needs to be a bit of a warning sign. Despite the idea, clear the book here, weekly timeframes look like it could progress up and go higher. Look, if we close above 5,100 with a solid candle, then we're going higher. That's the confirmation. This was a wipeout, and now we are going higher. That's what I'd be looking for a very topside move. The reason I caution it is because this is a rising support. We've closed underneath it, and market has respected it a little bit over the side here. It's, I mean, last couple of hours, you don't really worry about it too much, and maybe we gap up through it here. But still, it's on the underside of this. And you got to sort of make the decision of sort of like, does that mean anything? Does that mean, okay, that is this a just continued sort of fake out? Generally, if you are going to see a fake out through a rising support, it's going to be almost back within, if not the candle that it breaks, one or two candles later. But this is obviously sort of stuck on the outside for a little bit here. And it very much could have gone two ways, because as you can see, prior to that CPI print, it was kind of a bit sort of, market was ready to take out these lows and come down to these levels over here. So I'm not completely sold as of this point that we are definitely going higher. I still think that this rising support needs to be sort of sussed out and played out for the idea that you can't just break a trend and then just go, oh, it doesn't matter, and negate it and push on. I mean, it could do. The RSI looks like it's ready to move a little bit higher. As I said, it looks like it might want to gap up a little bit, but I'm not sold yet, and I'll be sold when you get a big solid close up above, probably these highs that we just put in here before it sort of came back, so whatever they were, 51.20. I think a big solid close up here, okay, fine, and we look and we potentially go up a couple of $100 over here. Maybe we look to the sort of, the 78% fib line here, which lines up pretty well with a little bit of a support through this zone here. So I'll mark this out just for the point that we could potentially obviously get up over here. Oops. There we go. Around that sort of 78% fib. And a bit of a sort of a confluence there. So should we break above here, big candle above this side here? That's where I'd kind of be targeting. See what the market has to do there. Do they break through? If you break through, well, realistically, if you look at that other structure, you're going right up to the highs over here. That's, the played out path if that were to sort of go through there. They're the kind of levels that you would be looking at. That's not my base case. I want to see that candle close through here, and then I'll be a little bit more on the bullish side of it all. The fact that we broke through here, I still think needs to be resolved, and this needs to be resolved by at least another move down towards these sort of 4,900 levels. See that the buyers are really sitting at this level over here, and then sort of jam it up through there. Turn this into a bit of a range kind of thing. So early push up, but I wouldn't be expecting that. If it pushes up early, I'm not looking for that to break out and then, okay, run straight up. I wouldn't be surprised if we get something to this kind of effect, to sort of move up into this area, get rejected again, come down here, and then sort of see, are we going to see the buyers come in from there? Oops. Or are we going to see it sort of push back down like this? That's kind of how I'll be looking at it coming into the week. This, obviously, as I keep saying, is negated by a big close up over here. You get a big close candle out the top over here, then I reckon it might be going. But I want to sort of see that there's a real sort of commitment from the buyers over here, because breaking the trend, I think, needs to be played out. Now, just a quick thing, I'll get back to the actual levels with this as well, but if you look at the reason that I'm not completely sold at this is if you look at how silver reacted. Silver did not really bounce back up at all compared to sort of what we saw with gold. So they both had that big sell down. Silver's come back up. It's obviously rejecting at that level that we said, look, this is where the sellers are going to be. Why? Because this is where they were previously. This is where they turned into support. Well, lo and behold, here they are. They're back here being resistance again. So, again, it hasn't died. It's just consolidating, chopping into the end of the week. But, if this was a true metals resurgence, and the metals are both going higher, look, anything could happen. We could see gold go up and silver down, but most likely we're not going to say that. If gold goes, silver's going to go. If silver's going to go, gold's going to go. Different speeds, different paces, but most likely you're not going to see this silver, which it does look like it wants to a little bit, sort of maybe roll over and come back down here, potentially put in another low, or at least test these lows down here, with gold going up through for major breakouts. I mean, look, gold could break out and silver could obviously be dragged along with it. But the thing is, if this was a full metals market, I'd expect silver to be doing a little bit more while gold was going. And if we look at the dollar obviously got slapped down. But what's the dollar doing? It's just ranging. It's actually respecting the top side of whatever this. I've said a number of times I hate these diamond resistance things, but diamond reversals. But, it broke up here, it looked okay, and then obviously CPI, not conducive for good dollar strength. Okay, it sold down. Okay, that's fine, that's done, it's out of the way. But the dollar didn't break down. And this is what I'm sort of like, you can't just look necessarily at one chart and go, yep, okay, well, that's going towards this level. At least I don't. I look at what I call cross-chart confluence, and means that, I want to see gold moving up. I want to see the dollar really, I want to see the flows coming out of the dollar and then going into gold. I want to see the flows coming out of the dollar and maybe going into a bit into silver, a bit into gold. And so you could see that kind of stuff flowing together. And another one, if you look at the Aussie, if the Aussie wants to come up, the Aussie did not really, it came off its lows, yeah. But again, it's not coming back up to its highs. Like, this is the big sell down candle. So if you can see sort of like, this is where we had that big sort of sell down across, like, silver sold down, gold sold down, Aussie sold down, right? Gold has made it back up to that level. Silver has not made it back up to that level. Aussie has not made it back up to that level. And look, these things aren't necessarily running 1-to-1-to-1 kind of thing, perfect ratios with it all. But generally, kind of, you would see these things all kind of at least be pushing in that direction, whereas the market's not convinced with silver. That's what is happening here. That's a doji kind of area, 4 dojis in a row. That's indecision, and that's a continued indecision and cautiousness into the end of the week. Aussie obviously didn't recover, and the dollar hasn't broken down. And gold, yes, it has sort of moved back up here a little bit because we had that data that supported that recovery move, the weak CPI. But I don't know, till we sort of see a lot of these things coming up and working together, i.e. the dollar breaking down, silver doing a bit better, to a lesser extent Aussie, but Aussie's just going to be a bit of a canary kind of thing. So if you see the Aussie moving, maybe that's a bit of an indicator about what's about to happen with metals. Till I see all those things kind of acting together as they should, then I will believe that the move is actually happening. Because you do have the idea that gold is reacting to that news. That's fine, but the market consensus is not being shown with the dollar, with silver, with Aussie, these kind of things at the same time. Well, you've got 3 things that aren't breaking and recovering. You've got 1 thing that is breaking and recovering. What's the chances? What's the percentage likelihood? And I'm not saying it's a definite, nothing's a definite in this game, but it's just how I'm viewing it, that maybe, these other parts of the market are actually acting kind of what is really kind of happening, i.e. the dollar is not completely breaking down quite yet, silver's not recovering, Aussie's not fully recovering. Maybe gold is just being a bit of an outlier into the end of the week because, again, look, end of the week flows have been to buy gold for months and months and months because we get so many out there headlines over the weekend. If you go back and look at sort of Friday to Mondays and that, you probably got a pretty good hit ratio in that sort of with how sort of gold reacts due to like, so, Trump saying some headline about, remember Greenland. Oh, okay, that was happening. We got the coming up this Friday, potentially the sorry, I've lost my words now on that. The Supreme Court decision on the tariffs, that's been a gold driver as well. So I don't know. Look, it's as I said. Look, it's the levels are there. If we go back to originally what I was yapping on about with gold, look, the levels are there, but to me, it's just not completely sold as of quite yet. So if we get above 5,100, then I think that's a goer. But any sort of move up early, I wouldn't be surprised if things get sold back down. However, if we could see a continued buy up from this, I mean, breaking this support doesn't mean that, okay, it's destined to come down here. It could go into a period of consolidation. The point is, it's just with all those other factors I just rabbited on for 10 minutes about, and the idea that you've broken this rising support here, I don't think that sets it up to go, okay, let's bang, break up and go up to the top over here. So we'll see how we go with that. So just for the point of this thing as well, I will just bang a couple of these in here and say, look, fairly wide range here, but of course this is on a 4 hour. If we do get a sort of close down underneath sort of 48.80, whack us out. Um, or a close above 51.20. I think that's really going to sort of give us our direction for the week there. So, as I said, if we see a sell into this thing and we see the buyers move up from that sort of sell down low into a sort of a level up over around here, maybe we sort of see a bit of a retest and a hold of this 49.90 area. I'd have a bit more confidence that this thing's going to actually then break up higher. And look, I could miss the boat if this thing just breaks and goes up higher first, but to me, that is sort of give us a bit more sort of confidence with it as well. Another note just with this as well before we move on, or before I move on, that we also have Chinese New Year sort of happening here as well. So Asia session could be a little bit quiet. I think we may actually have a US holiday as well. Just bear with me one sec. US holiday, yeah. So it's a US holiday as well. So I wouldn't be surprised if it's quite quiet. So we've got a bank holiday in China, which is obviously those uh, Chinese New Year. And then we've got sort of the US off as well. So I wouldn't be surprised if we were a little bit quieter sort of through that Monday session, just given that the bulk of the US isn't there, and then the bulk of China isn't there as well. So obviously the sort of two major sort of players with it all. But also, one thing just with the China New Year was that I was reading something over the weekend, and they were saying that sort of a lot of these guys sort of like obviously China New Year, big celebrations, all this kind of thing, and so people will do a lot of buying and a lot of stockpiling of like the gold and jewelry and all this kind of stuff in anticipation. So through the January period, to sort of lead it up prior to this occasion. So maybe that's something that has been holding things up here a little bit as well. So again, look, I'm not 100% sort of in either camp of it all, but I'm just cautiously looking at any sort of break. We go up to any sort of early moves up here before we could potentially see more of this sort of just sideways grind before we actually see a full direction. But they're the two levels that I'm looking for, highs and lows. Cool. So I'll move along. Obviously, we've got silver. I briefly touched on a moment ago, and we saw that sell down like we did with the gold, and the recovery is respecting the chart, exactly kind of where we sort of thought it may. So coming down to these points over here, look, RSI is trying to tip up, but not really showing a great deal. Look, again, we're coming into the end of the week, but these are 4 hour candles, so I disregard the last candle. You still have 12 hours of rejections from this level here as well. So I think sort of any sort of move back down towards 74 could still open this up to a rollover downside move because this really hasn't at this point sort of shown that it really wants to buy back up. So I'm still sort of in the idea that this RSI, this could just be a little bit of a fluff bounce into the end of the week, and we could still be seeing some downside moves here. So any sort of move under 74, I think will sort of open the door to that sort of 70, 80 level. Bigger sort of thing, if you get, we select this thing without, do this, bigger sort of move, if we get a close down underneath here, that's your major level for silver, should this thing sort of really sort of turn around and roll over, come down here. So bang a little alert down here. That's not the reversal. This is, use this one, don't even have to change it. Cooling. So underneath 70, that'll be major breakdown. Not just cooling, that's major breakdown levels are. Oh, just doing these notes at the same time, but yeah, so that'll be your sort of major level there. Short term of it, look, if we get a sort of bit of a, not this one, if we get a bit of a close through this area here at, if we get a sort of bit of a close through this sort of little bounce area here around this sort of 74, 74.50 area, a close down here, then we'll be sort of targeting these body fills, close under the body fills, and that's pretty much, you know, you're looking to fill the wick, and then potentially we're looking down mid 50s or that. But, you know, as I said, look, this thing is still, you know, we had this bounce, 38%, took out the lows, but this was a big, strong rejection, grind up here. This has still got the ability to be a bit more of a sort of like downside move, with this just being a little bounce, you know, dead cat bounce, whatever, little move through the side here. If we see a close down underneath the sort of 70 area, these body fills, 70, 40, although they're about, just call it $70 to make it easy. If we see a close down there, that confirms that this was really just a short squeeze. And that means that basically whole market saw 38%, saw lower. They got the sort of grind back up here, well, the squeeze back up over here, drag it back down. Maybe this wick might hold. 64 would definitely be the place that you'd be looking for. So that'd be, you know, still, you know, $5 quick drop down here. But realistically, I think that opens up the door to the test in the mid 50s. I mean, this thing's bounced up, but, you know, again, it's just rejected time and time and time again. This RSI is turning off sort of oversold, but this could very easily just roll over and just go bang down here, and we could still see some downside here. And again, look, I know, just recapping what I said, but this is why I just don't think that gold is particularly necessarily set to go. This could go. I mean, look, as I said, when we got this bounce over here, this was that, you know, potential for inverted head and shoulders with the super wonky neckline. So, you know, there is still ability for this to come up over here, but it's got a lot of levels. Obviously, you know, this first one here, 78, it's got to get through that sort of 83, get through these highs, get through this. It's got a lot of work to do to get up to the top side over here. And I'm not completely sold of this being an inverted head and shoulders, just with this neckline being too wonky. But, you know, as it is and as it was when this was happening, I said, look, that could be the idea that people are looking for. But to me, this kind of feels like it's still got a little bit on the downside to go. Flip along, we got dollar. Again, look, obviously I've brushed on all these things. It's held where it needed to hold for me for now. We put this on a weekly. Was that weekly or monthly? I had this on. That was a monthly. Daily. Find the one that works for daily. There we go, because it got the body fills. So I'll try to sort of chop back and forth, find which one that sort of fits the narrative. No, it's not really that. But again, look, this thing sort of bounced back up here. We got a bit of a fake breakdown at this point. Obviously, this bounce, I kind of thought we would have got a little bit higher before we came into this leg here. But this is really why this area is so important right now. Because realistically, if we look at this, if this is going down further, you're in that third leg. We got the move down, found support, move up, we found resistance pretty much at that previous support. Now we're in this third leg here. This is the question with this at the moment, because this is why this is so important. If the dollar recovers from here, well, look at the structure. We've got a high or low after a fake breakout. So what does that mean? It means that the buyers were taking it here. The buyers have now moved up to here. It puts the emphasis back on 98 to then sort of potentially break out through here. And then this is the pattern that you're looking for. You're looking for higher lows and you're looking for a dollar recovery move over here. Now, the CPI wasn't conducive to that, but again, they've got the dual mandate. And this is the thing that this is, again, I know that I keep rehashing the same stuff, but it all sort of feeds together. That sort of, if gold was about to break out, and I do think this works both ways, because if the dollar fails this area here, this is chopping back and forth a bit, but at the moment we're in a higher low scenario. You need to break out of this little congestion, target 98, break 98, dollar recovery, metals down. That's how metals will work. If we find that this little congestion area here breaks to the downside, and that's kind of what you're doing, you're targeting these lows over here, get rid of these in this scenario, then you're really getting some pretty bad breakdown on the dollar, because this is an area, obviously support, fake breakout, back into it. But if we come back out underneath this support here a second time, same like with silver, we sort of said that, hey, look, that was a little bit of a squeeze. Is this a dollar squeeze? And now we're going to come down here, because if we come back out here at the bottom the second time, most likely that's what you're looking for. You're going to see something like this. And that's obviously very drastic for the dollar. It's also going to be very bullish for the metals. So I think that I don't think we can kind of really truly commit to say one side or the other at the moment, because it's not showing us yet. At the moment, this is consolidating. You know what I mean? We had obviously a very turbulent week, but more or less like the same with the gold. And yes, it sold down because we had those headlines about Besant sort of saying, hey, we're don't be afraid of bad job numbers. Not only did we not have bad job numbers, but we had extremely strong job numbers. It wasn't enough to fully hold the dollar to recover, but then we had CPI, which is weaker than expected. So, CPI is not sort of a reason for them not to cut. That should have pushed the dollar down, but it didn't. And this is, again, I said at the start of this video that it's it's a tough time to be trading, because you've got conflicting bits of, data, and the market hasn't truly shown us what's what yet. We had this is on the daily. You got 4 days of indecision sitting here. Should this thing recover and push up over here? Well, we know what the path is. Metals will go down. Should this thing break down over here, it's probably a pretty bad time for the dollar not to be able to hold a higher low. You're going to be firstly sort of targeting 95.80, but should 95.80 go, and most likely it would, then you're probably sort of coming back down. Okay, 94 is probably the next target there. A little bit of a 161 retracement of that bounce move. I wouldn't be surprised if that's kind of where we head to here. And so that's what we're really waiting for. We're waiting for a recovery move, close above 97.40, or we're waiting for pretty much a close down underneath 96.40. All right, so just writing these notes as I sort of go with this stuff as well. So I think this is a very crucial, pivotal sort of point here at the moment. And I do think that should we sort of break to the low side here, yes, you target this level here, but most likely, like I said with silver, exactly the same. This just turns out to be a squeeze because we're going down lower. However, if you do break to the top side, and I think the early indicator is going to be that close above sort of 97.40, I think that that's really going to be sort of getting those sort of dollar shorts a little bit sweaty. As much as I can't make that any, I can't make this any thinner. So anyway, that's your downside move for you there. But yeah, more or less they're the two kind of levels that I'm looking on a daily time frame for these things to break and close above, and then see our direction, and thus sort of with that flows on with the metals there as well. All right, flip across, just finish off with Aussie, because Aussie has, again, this is on the daily, broke out, made a big effort out the top here, couldn't quite do it, and bang, we've come back down. So, look, again, with the fundamentals, I don't think the Aussie is completely dead. I think Aussie is very much alive with the bullish kind of sort of potential move. I would have liked to get a little bit lower before we got a bit of a bounce up over here. We do have a little mid-range, kind of little mid-support thing set up through here. Did manage to kind of close above it, or above kind of where it should have needed to. It is oversold. And this is the thing as well. Again, look, I know I keep rehashing, but this thing bounced here, 3 rejections from coming down lower. Well, RSI did like, hello, is this thing awake at all? It's like sort of at 2. So, it makes me query the idea that the market, at least in this sense over here, is really believing that that dollar or that CPI data was enough to kill the dollar. If it was enough to kill the dollar, well, Aussie is the first one up at the moment to break higher because it's got the highest rates going around. It's got inflation leading, the developed world. It's got an RBA that's, not just bullish, but this other Hauser guy coming out, and they're talking tough. And this is why I do believe that, Aussie, given the right scenarios, can go up over to these 73 levels. However, just if in this context of this move back here, it doesn't look like the RSI really woke up at all. It's just kind of like, oh yeah, I guess, weak CPI, Fed cut, yeah, I guess so. Well, it's a reason not to go down, but at the same time, it's not necessarily a reason to go back up. And that's kind of how I'm sort of viewing this thing. And this is how it kind of all sort of flows together. So it's not, directly related to the gold market, but this is related to dollar sentiment, US dollar sentiment across the market. And if the Aussie people trading the Aussie aren't believing that the US dollar is completely screwed from that bit, look, it could, and definitely, I mean, again, this is why we have the confirmations to go out the top side here. But I would have wanted to see this at least pushing back up here a little bit more of a recovery move over here. If this segment of the market believed that that CPI data was enough to kill the dollar at this point, but they didn't. It really just kind of just fluffed around in a 20 point range at the lows, not really recovering that big sell-off that we saw from 71.40. Dropped 100 points down through there. So if the market here would believe that the dollar was stuffed, this would be a bit higher, and I would believe that to sort of show that, okay, yes, the dollar is a little bit more stuffed, and most likely will go down, confirms it a bit more that it will be going down lower, and through that sort of flow, believe the gold move to be going a little bit higher. Again, this is just how I view it. This is my little cross-chart confluence thing that I would like to sort of see happen. So top side for Aussie here, first things first to get a close back up above 71. But really, main thing, you want to get 71.50. They're the two levels we're looking for the top side on Aussie. I'm not open to the idea, given all this sort of, hey, I don't think the dollar's completely screwed here, to see the dollar actually roll down and Aussie dollar roll down and get down here a little bit lower. I did want to catch this low area here for a bit of a bounce. I'm a little bit cautious about this now. When these things come at the target, they don't fill, and then they kind of bounce back up already. I kind of don't want that level anymore. I would like to get a little bit lower. Like, it's kind of like I've missed this one, missed that bounce. I don't want to get 10 points lower than where the market already just bought it from. I want to get the next leg down. So it would be something, I think if we look on a lower time frame, I had a bit of a sort of, which one? I can't remember. Maybe it's on an hourly or something I had it here. I can't really sort of chop anything out of this now. But again, maybe around this 61% is where I'd probably be looking. So, again, if we do break lower, if we see the dollar hold up for a little bit longer, like the dollar won't have to fully break out, but if we do see the dollar at least hold a little bit firmer, I would expect this to continue. And then if we do see the dollar sell off, then we see a bit of a bounce. But if I could get sort of a little bit lower than here, I'm not interested 10 points lower than what we got, 40s down to 30s. I want another 50 points or so off that move to then sort of look to see if the 61% level can hold. And that's 61% from this bounce move or this last drive up here to give it a little bit more of a risk reward trade for the Aussie. But again, top side, if we get above sort of 71, then okay, I think your first target is back 71.40. And if we get a sort of move up above 71.40, then I think that's where we're kind of, not that one. That's when we're kind of looking a little bit higher for the Aussie. But again, I'm pretty cautious about this move. And even if we do get a bit of a push up early, that we may still see a little bit lower to these levels down over here. All right, look, that's pretty much it from me. Have a quick sort of look at the yen, as we sort of saw. Look, it's hit back into that zone, which I was sort of saying, look, I would have liked this thing probably to hold a little bit more along here. Obviously, it's quite weak from that for early analysis. What was that, Tuesday or Monday? Tuesday. This sort of thing, just basically chopped around a little bit, boom, coming down. Yen seems to be strengthening across the board. It did sort of come back into this target zone, which is kind of the top side of this previous sort of falling resistance. Also, this rising support here. But this little rising support here, although it's playing its part, as you can see, bounced up over here, this isn't the major one. So even if we do see yen strengthen and continue to strengthen a little bit more, I think there's definitely some little chop down here, but this is the main one that I'm really looking for because this is the daily. This is the one that sort of came up from April last year, where we can see that this thing is really kind of held. This is what I'm talking about as well. So when you get a fake out through a channel, this is kind of what you see. You see it sort of go down, and then within a candle or two, it's back up inside it, and then it continues and moves up like this. Not what gold did. Gold closed down, and then it hung around. Now it's grinding up the underside of it. There's a difference between a fake out and then sort of like 8 hours of whatever, or 16 hours or whatever it is on the outside of it there. So again, I wouldn't be buying this necessarily right now. I wouldn't be surprised if this channel looks like it kind of wants to pretty much bucket down. I think sort of like 106 was a bit of a strong area that it sort of held on the way going back up here. But I think sort of like realistically, maybe a touch up of this rising support, which is that big channel, would be sort of where we're really kind of looking for this thing to sorry, at the same time here, I'm just sort of looking at this. Can I do this up here? Oh yeah, I can. Oops. Maybe it would have been easier to just draw it myself. But again, that's a big negative divergence. I mean, look at these highs here, all the way up to the, like this thing hasn't really put in a proper push for a while now. So it means that I think that this has probably got a bit more downside here. I'd be interested maybe back around these 105 areas, sort of see what happens. You know what I mean? It's pulled away from this main trend for quite a while. So coming back to it, you know, maybe better chop coming down over here, these 105, 105.50s, 1060. That's an area which I'd probably be looking to get, have a little bit of a dip at it for any sort of potential longs. But yen seems to be strengthening across the board a little bit. But I think sort of wipe out a couple of these supports back to this main trend. Look, you will get a reaction from this main trend. That's the thing. When it hasn't touched it for a long time, it's like the horizontals. It's not going to go through first time, but you know that's still a couple of 100 points off from there. So I would say you probably get a bounce effort from here, but that'll be the one to watch because if that fails and then breaks through, then you're breaking a trend that it's more or less been respecting since April last year. So almost coming up almost 12 months that it's been respecting that trend. So you will get a reaction once it sort of makes contact over here. It's just that second effort from that level is what's really going to be important. All right, and I think that's it. Now we've got a bit of data through the week. Not too much, nothing of note on Monday. I got the meeting minutes and that for Tuesday. That might give Aussie a little bit of a boost. So maybe if we get down to that 61, we get a bit of a push here. But I think everybody pretty much knows what they're talking about with the minutes and that. But now that we have the press conference afterwards, a bit of UK data, bit of CAD data. Excuse me. We got manufacturing. These sort of manufacturing numbers could really dance around all over the place. So it's something to keep in mind. I mean, look, all the stuff that the dollar needs at the moment, it needs some positive data. So as long as these things just don't completely pack it in, it's seen as a positive for now. Got the cash rate they're holding over there in, it's quite low actually, over in New Zealand. That's probably why Aussie against New Zealand has been massively breaking out of like a decade long range over the last couple of months. I didn't realize they were so low. I knew they were cutting aggressively, but I didn't realize they were so low over there. Business confidence, fine. It's pretty quiet on the news front. We've got durable goods and that sort of Thursday, so Wednesday night. Got Fed minutes. We got employment. Here we go. Oh, I was about to say any bet what we're going to get here or what they're going to predict here. 20,000. It's an ongoing joke every month. 20,000's the spam. And then we got unemployment rate seems to tick back up, or they're expecting it to tick back up because we had that bit of a drop off. It was 4.4 down to 4.1. Sorry, 4.3 expected to go to 4.4. It came down to 4.1. So not only did it not go up, it actually came down a couple of ticks there. So maybe just a little bit of a bounce back with that. But I think anything that comes in at 4.2 is going to be seen as a little bit not as so, like it's still good. It's, compared to where it has been, it's still good. But again, with these kind of bits of data, it's not necessarily like it's kind of think about it as like, what have you done for me lately? And lately, you've been 4.1. Going to 4.2 is obviously in the wrong direction for, necessarily supporting the idea of holding, or hiking more. Moving on, plus as well, 60 back down to 20 is just reverting back to that. But again, you take this number with a grain of salt. They say 20,000 every month, literally. We got the unemployment claims. This has sort of had a couple of weeks down, but it's popped back up. So we see 198, 200, 209, back up. That's 2 3 weeks up in this area over here. You don't want to see this go much higher. If this goes up around 240s, it's not going to be strong for the dollar. Or depending what you're trading, maybe you'd want to see that to 240 and you're looking to go long on gold. But that could be something that adds to gold's moves over there as well. And then coming into the end of the week, we have a bit of PMI data, all this kind of stuff, and then we got PCE at 12:30 on the Friday, and then we got just nearly 2 o'clock on that for the manufacturing numbers there as well. These are the ones above 50. You got expansion, PCE, slight little tick up there as well. This is again the PCE is kind of like the sort of it's another gauge of the inflation. It's the kind of think about the up the line kind of thing. The sort of people that are selling to the people that are selling to the consumer. So obviously, if they're seeing inflation there, the idea is that it might sort of trickle down. So we've got a little bit of a slight advance on this number here. So again, if this comes in hotter, then that's going to be more sort of dollar strength direction, supportive, call it that way. All right, that's it from me.